central banks and governments are starting to look at, can we take advantage of new blockchain technology and issue our currency in a digital form? And so that means a couple of things, because right now governments and central banks are looking at different ways that we could do this. And so without getting way too far into the weeds, let's talk just a little bit about a couple of different ways that this type of digital currency could exist. One way is that all of us could have direct accounts with a central bank. So in the United States, that could mean that instead of us having an account at Citibank or JP Morgan, we'd all have an account directly at the Fed. And our account at the Fed would hold our dollars in digital form, and we'd be able to make, in effect, deposits and withdrawals. And we would transfer, for example, that virtual currency from our account at the Fed into our smartphone or into our smart card, and then we'd go out and spend the money just like we always do now by just walking into a store, walking into a Starbucks and saying, "Here's my virtual money. Here's my phone." Again, not completely dissimilar to the way Apple Pay, for example, works, but we would be linking directly to the central bank. Another way that we could potentially do this is for a central bank to create a digital currency, but still require us to access that digital currency through commercial banks the way we do now. So we would still have deposits, in accounts and checking accounts in commercial banks, but that in turn would be backed by the commercial bank having corresponding deposit in the central bank, so that indirectly we still have the virtual currency from the central bank, but we're doing it through the commercial bank acting as an intermediary. Which way that goes will depend in part on a number of factors, including the extent to which we want to continue to be able to empower commercial banks to perform activities like lending activities and so on that require these deposit accounts as a means to provide the capital for commercial banks to do the things that they do. There's a third structure in which a central bank actually creates a representative value of the fiat currency. So instead of it being a direct issuance, it's an indirect one where the central bank, for example, the Fed, takes a bucket of dollars, puts the dollars into an account, and then issues a digital coin, a digital currency that is backed one-to-one by that bucket of dollars. And so what you've got now in this case is in effect an obligation, in effect a debt instrument of a central government that is backed by the underlying currency. And so again, right now we're looking at different ways to create central bank digital currencies. The other thing that governments and central banks are looking at is whether it gets rolled out only at a so-called wholesale level or at a retail level, because initially it may be just with the technological complexities of creating central bank digital currency, that creating one that initially is used as at a wholesale level, like an interbank payment mechanism, may be step one before we finally roll it out to the retail or individual level. Because to get into the hands of individuals like you and me, we have to be able to not only create this digital currency that we can track on a blockchain, but we have to be able to integrate it with things like smartphones and smart cards, create systems that, addresses what happens if you lose your phone or if you lose your smart card. We have to have people be able to use it and access it without having a certain level of technical expertise. We can't, say to people, oh, by the way, you can have your money in digital form, but you have to learn how to create a private key, and you have to learn how to store it, and you have to learn cryptography. If we can't expect people to adopt a digital currency if we can't make it, in effect, something to use as simple as turning on your smartphone. And so we've got a long ways to go, but that's what governments are looking at now. They're experimenting, and the pandemic has really accelerated that process for all kinds of reasons that I think are fascinating to look at and talk about. But by the way, currency itself is a terrible carrier of bacteria and germs. And so if you can access money without having to leave your home or without having to go into public areas where social distancing becomes a concern, that's an important factor. Other factors are things like if we look at as part of the CARES Act, a lot of people in the United States got their $1,200 checks. And there were a number of cases where the checks didn't make it to the right person. The checks got lost. The checks got stolen. The checks were issued to people that were dead or weren't entitled to it. And all of those problems could have been addressed so much better if we were using a digital means of taking a central bank digital currency and directly giving it to individuals that were able to prove through blockchain technology who they were and that they were actually entitled to that payment. And so we could have made that process so much more efficient. And then there's a third factor, and this probably is less driven by the pandemic, but is an important, really important driver, especially when we go beyond advanced countries like the United States in the EU, and we start to look at emerging market and developing countries. For those countries, access to banking, things that we take for granted, is really hard. You may have situations where people live in locations that don't even have a bank within proximity to where they live. So they literally would have to go hundreds of miles if they just want to be able to go into a bank and utilize bank services. And then on top of that, in a lot of emerging or developing market countries, banks are not interested in servicing a lot of poorer individuals within those markets. And so the access to banks and banking services are often limited to the wealthy within that country. And so when you look at those two factors together and you go into the emerging market or developing market part of the world, there are a lot of people that just don't have access to banks and therefore don't have access to financial services and to the global economy. And we're sidelining millions and millions of people, that could be part of the global economic structure. And so using digital currency over time allows us to, in effect, democratize access to money and to finance, and to really empower people and to improve the global economic circumstances for everybody. So on a long-term basis, it could completely change the economic profile of a lot of emerging market or developing countries, or at least the citizens of those countries. And that's really cool.